Welcome to the Deep Dive, your shortcut to being the most informed person in the room.
Glad to be here.
Today, we're looking at Eaton Corporation plaque, specifically their Q3 2025 performance.
Yeah, and on the surface, it was a really, really strong quarter, record numbers in several areas.
Exactly. But our mission here isn't just, tallying profits. We want to understand this massive strategic pivot they're making,
Hmm.
this big bet to really capture the growth from, well, global electrification and maybe even more critically, this AI megatrend.
That's right. We've dug into the Q3 earnings call transcript, the financial filings, all the source material.
Okay.
And the goal is to pull out the key insights, like what segments are really driving things, and how does this recent acquisition activity fundamentally reshape their business,
Yeah.
especially for AI and data centers.
And maybe the best way to see why this pivot is so crucial is this one number. It really jumped out at me. Eaton saw data center orders accelerate by 70%, 70,
70% in Q3, yeah.
which led to sales in that sector growing 40% compared to Q3 last year. I mean, that kind of acceleration.
It's huge. It tells you the market is already, pulling them right into this new tech era. It really confirms the strategy.
Yeah, absolutely. Unprecedented speed, as you said.
So should we start with the overall financial picture for Q3?
Yeah, let's do the quick scorecard. The main numbers looked, well, pretty great. Total revenue hit a record $7 billion.
Right, $7.0 billion. That's up 10% year over year.
And importantly, 7% of that was organic growth. So solid underlying performance.
And the operating side was, frankly, phenomenal. Adjusted EPS, that's earnings per share, hit $3.07. Another quarterly record, up 8%.
And the margins.
Margins were really impressive. Segment margins hit a record 25.0%. That's up 70 basis points from last year.
So 0.7%. For listeners, that's significant margin expansion, right? Especially while they're investing so heavily.
Absolutely. It shows really strong execution on pricing, on cost control, even with all this global investment going on.
Okay, so we know data centers were hot. But drilling down a bit, where did the strength really come from? Which segments?
Well, Electrical Americas EA, that was clearly the main engine.
Right.
That's where the momentum really built up. If you look at their forward indicators, like the trailing 12-month average orders,
Yeah.
the LTM,
Okay.
that accelerated from just 2% growth back in Q2 up to 7% in Q3 for EA. That's a big jump.
And the backlog, that tells you about future work. Right?
Exactly. The backlog, so work signed but not yet billed, grew 20%. It's now at an all-time high of $12 billion just for EA.
12 billion. So that provides, what, years of visibility?
Pretty much. Several years of guaranteed revenue locked in right there. Really strong forward visibility.
And it wasn't just electrical, right? Aerospace sometimes gets overlooked.
Yeah, aerospace had a strong quarter too. Organic sales were up 13%.
13, okay.
And margin expansion was even better, up 150 basis points. So their aerospace margins hit almost 26%. So it shows that, while everyone's focused on AI, their core infrastructure and defense businesses, still very profitable, very resilient.
Good point. But for balance, we should probably touch on the areas that faced maybe some headwinds.
Definitely. Not everything was booming. The industrial side, particularly vehicle and e-mobility, they saw some challenges.
Right. Vehicle segment.
Vehicles saw a 9% organic decline. That was mainly due to softness in the North American truck market and light vehicles too.
So more cyclical pressure there.
Exactly. And management basically indicated that's likely to stick around for a bit.
And eMobility, that was even weaker, wasn't it?
It was, yeah. Organic sales there decreased by 20%. 20.
Oof.
And that resulted in a $9 million operating loss for the quarter in eMobility. Now, some favorable currency effects helped offset that a bit on the bottom line.
Okay.
But it really highlights the volatility you still see in, EV production schedules from the automakers.
So even with the long-term electrification trend, the short-term execution in some EV-related areas is still tricky.
Very much so. It's a reminder of those challenges.
Okay, let's shift gears now to the why behind that incredible 70% order surge in electrical.
Yeah, this is where things get really interesting.
It feels like the sheer physics of AI is forcing this massive infrastructure overhaul. We have to talk about this power problem.
It's genuinely an exponential problem. Think about it. Before all this generative AI took off, a typical data center rack, it needed maybe 10 to 15 kilowatts, 15 kilowatts of power.
Right, pretty manageable.
And standard air cooling systems, fans and airflow, that tech was mature. It handled it just fine.
But the power demands for these new AI chips, they're skyrocketing. The numbers are kind of hard to grasp.
They really are. Take NVIDIA's chips, the GB200 that came out in 2024. It uses 120 kilowatts per rack.
Okay, already a huge jump from 15.
Then the GB300 this year jumps again to 180 kilowatts per rack.
180 kilowatts.
And looking ahead, the projections are just staggering. The next-gen chip, Rubin, they expect it to need around 600 kilowatts per rack.
600.
And the one after that, Feynman, could potentially hit 1,000 kilowatters. A megawatt per rack.
A megawatt in one cabinet. I mean, that's like a small neighborhood's worth of power, isn't it? It's kind of mind-boggling.
It is. And that power density forces a technology shift. It's not optional.
How quickly does that happen? When does air cooling just stop working?
Almost immediately, based on these numbers. It's hard engineering reality. Once you get above, say, roughly 50 kilowatters per rack.
Okay, 50 kilowatt is the mark.
Around there, yeah. Air cooling just physically cannot get the heat out fast enough. If you try to push it, performance tanks, chips degrade or fail way too early. The whole system becomes unreliable.
So this barrier, this 50 kilowatt limit, means the massive growth in AI chips directly translates into massive, unavoidable demand for liquid cooling.
Exactly. You need a more efficient way to transfer that heat away. That means liquid cooling solutions, advanced ones.
And the market forecasts obviously reflect that necessity.
They do. The global liquid cooling market. Estimates put its growth around 35% per year, compound annual growth rate, through 2028.
35% CAGR.
Wow. That's the embedded growth, that huge market opportunity that Eaton is now squarely targeting.
Which leads us perfectly to the Boyd Thermal acquisition. The big one. $9.5 billion agreement expected to close, what, Q2 2026?
That's the plan, yeah, Q2 26.
This isn't just Eaton buying some market share, is it? This feels like them positioning themselves right at the absolute center of this liquid cooling imperative.
I think that's exactly right. It's the absolute centerpiece of their invest for growth strategy pillar. Boyd is widely seen as the global leader in liquid cooling.
Okay.
And their real value, their edge, comes from this unique engineering advantage. They aren't just reacting to market needs. They're designing the solutions years ahead.
Right. You mentioned this designed-in approach. They have, what, 500 engineers?
Something like that, yeah. About 500 engineers working directly with the chip companies, your NVIDIAs, AMDs, and also the big hyperscalers, Google, Amazon, Microsoft.
That's not giants.
Exactly. Working with them to understand the thermal problems of chips that are 2 or even 3 generations away from hitting the market.
2 or 3 generations ahead. That's incredible foresight.
It is. Compare that to, say, Eaton's traditional aerospace business. A plane platform might be designed to last 30 years.
Right. Long cycles.
Here, in the chip world, you're dealing with maybe an 18-month design cycle. It's incredibly fast. So being embedded that early ensures that when those power-hungry chips launch, Eaton, through Boyd, already has the thermal solution ready to go.
Strategically, then, what does Boyd actually add to Eaton's overall offering? What's the portfolio fit?
It basically completes the picture. It allows them to offer a full solution, as they say, from the chip to the grid.
Okay, explain that. Chip to grid.
So Eaton has always been strong in what they call the gray space. Like switchgear, power distribution, power quality components, the stuff outside the server room. Boyd excels in the critical white space inside the data center. The thermal management, the actual racks, the busways for high current power delivery, the PDUs or power distribution units right near the servers.
Got it. So Boyd fills that white space gap.
Precisely. With Boyd, Eaton can now address all 5 of the major technology blocks needed for these advanced AI data center builds. It's a comprehensive offering.
And financially, this must significantly increase the amount of Eaton gear going into each project, right? Their content per megawatt.
Massively. Huge increase. Eaton estimates Boyd adds about $500,000 in potential sales per megawatt deployed.
$500,000 per megawatt just from Boyd.
Just from the Boyd components, yeah. Which boosts Eaton's total potential sales for these high-end AI data centers up to roughly $3.0 million per megawatt.
$3 million per megawatt, that's a big number.
It is. And Boyd itself is a high-margin business, operating around 25% segment margins, similar to Eaton's electrical segments. Plus, its projected Q4 exit revenue run rate is around $400 million, suggesting it's already a significant business that will immediately boost Eaton's profile once the deal closes.
But, winning the orders, having the technology, that's one thing. Delivering on this, especially at the insane speed the AI market moves, does the acquisition bring operational headaches too?
That is the critical question, and maybe the part that gets glossed over sometimes.
Right.
The acquisition isn't just about buying tech or market share. It's about successfully integrating and scaling manufacturing capacity under intense time pressure.
So Boyd's own factories.
Exactly. Boyd is already in the middle of two major manufacturing ramp-ups, one in Asia, one in North America, specifically for these thermal solutions.
Okay.
Eaton has to not just integrate Boyd smoothly, but accelerate these ramp-ups. And they have to do it while also expanding capacity at 12 of their own Electrical Americas facilities.
12 their own plus Boyd's ramps? That's a lot of moving parts.
It's a massive operational challenge. They need to make sure that huge $12 billion backlog doesn't just sit there because they can't build the stuff fast enough.
Yeah.
Execution is key.
Okay, that complexity really sets the stage for looking ahead. You mentioned that order acceleration, the 7% LTM growth in Electrical Americas. Is that expected to continue?
Management sounded pretty confident. They confirmed strong momentum was continuing into Q4, and they highlighted a growing pipeline of projects under negotiation.
And the data center boom is global, right? Not just Americas.
Absolutely. That 70% order growth we keep mentioning, that spanned both the Electrical Americas and the Electrical Global segments. It's a worldwide phenomenon.
Okay.
And what's really interesting is how this specific AI-driven demand slots into the broader, longer-term trend of what we call mega projects.
Right, these huge industrial and infrastructure initiatives. Let's get some numbers on those because that provides the multi-year view, doesn't it?
It really does. So announcements for these mega projects covering things like reindustrialization, chip fabs, battery plants, plus infrastructure upgrades, and data centers, they hit $239 billion just in Q3 2025.
$239 billion in one quarter.
Yep, that's up 18% from last year and actually up 50%, 50, sequentially from Q2. Huge jump.
Wow. And how much of that is data centers versus other stuff?
Data centers are driving almost half of those announcements right now, but the other half is spread across manufacturing, grid modernization, other infrastructure, so it diversifies their market, which is healthy. They're not solely reliant on data centers.
Okay. And given that massive pool of announced projects, how good is Eaton at actually winning that business when they bid on it?
Their win rate is pretty strong. They estimate they win about 40% of the mega project work they bid on. 40%.
That's a good hit rate.
It is. And crucially, the total global backlog of these announced mega projects is now estimated at around $2.6 trillion. Trillion with a T.
2.6 trillion.
Now, obviously, that takes time to flow through. These big projects typically have a 3 to 5 year lag between the announcement and when Eaton actually recognizes the revenue.
Right. Construction takes time.
Exactly. But it means Eaton has locked in this incredible visibility, a multi-year runway of demand that stretches well into 2028, maybe even beyond.
That's powerful visibility. One last technical point we should probably touch on, because it's changing the data center itself, this shift towards 800-volt DC power.
Yes, that's a really important architectural change happening inside the data center.
Why the shift to 800 volts, and why DC, direct current?
Well, moving to higher voltage, like 800 volts, reduces power losses during distribution within the facility. Less energy wasted as heat.
Okay, efficiency.
And using DC power makes it much easier and more efficient to integrate directly with things like solar panels or wind turbines, and especially battery backup systems, which are inherently DC.
So better integration with renewables and storage.
Exactly. It streamlines the whole power chain. The big question is, who's ready to deliver the equipment for this 800-volt DC architecture?
And Eaton feels they are.
They seem uniquely positioned because they've been dealing with high-powered DC systems for decades. In other parts of their business, think industrial controls, or even their eMobility segment, working with electric vehicles.
Right, they have that DC expertise already.
They do. So they're not learning this from scratch like maybe some competitors are. They're adapting proven expertise to this new data center application. #tag outro.
Okay, so let's wrap up this deep dive. Eaton delivered, record financials in Q3. That's clear.
Solid quarter.
But the real story here, the takeaway, is this very deliberate, proactive strategy. They're using huge investments, like that $9.5 billion for Boyd Thermal.
Massive investment.
To cement their place as the critical infrastructure provider for the world's fastest-growing, most power-hungry markets, especially AI data centers. And they're heading into 2026 feeling confident, backed by these record backlogs.
Absolutely. And maybe here's the final provocative thought for you to mull over. All this strategic success now comes down to sheer execution speed.
Right. The point you made earlier about manufacturing.
Exactly.
Yeah.
The whole operational pace has fundamentally shifted. Eaton isn't just dealing with those slow 30-year aerospace platforms anymore. Now they have to keep pace with this relentless 18-month chip design cycle.
It's a different clock speed entirely.
Totally different. So can they successfully manage and integrate Boyd's big ramp-ups in Asia and North America, while also scaling up 12 of their own factories fast enough to meet this exponential demand.
That's the billion-dollar question, isn't it? Or maybe the $12 billion backlog question.
Precisely. Their ability to convert these record backlogs into actual delivered capacity and do it quickly, that's what will truly define whether they maintain and grow their leadership position over the next, say, 5 years. It's a massive test of logistics and execution against a constantly accelerating technological frontier.
A huge operational challenge ahead. Well, that's a fascinating place to leave it. That's our wrap on this deep dive into Eaton. Thanks for listening.